Good morning. We are live. This is the market update. I am your host, Bill Noble. If you need a roadmap in crypto or any help in crypto or a lot of help in crypto, stay with this channel. Turn on alerts and follow the Bill Alerts channel so you know when we're going live. And if the content works for you, please check out the feedback form down in the comments below. All right, let's welcome who's here. We have today's Tech Bites, Huber's Ranch, Corey, welcome. Jelster, Miguel, Mr. Lim, do we think this is the last big dip? Yes, we think this is the last big dip. However, it may not be done dipping. Mainly what you want to focus on is what's going to go on in stocks. But I do think, like, literally the worst could be over in crypto, especially if Bitcoin takes another dive below 50K. Double Ace, welcome. Mr. Relentless, Kane, what's up? Joshua Saint, Valdotes, Daniel plays paintball. Good morning, guys. Good morning. All right, I can't even begin to pronounce it. We will call you MC for your first two initials. All right, news, let's go. Okay, investors hope the worst is over. When investors hope the worst is over, it's not over. It's not, particularly in stocks. I continue to believe that the worst problem facing global markets is our stock market and speculators getting washed out of stocks, right? Now, crypto, the damage may have basically been done, right? In other words, there isn't a huge case for any more down moves in crypto. There isn't. Now, will crypto react if equities, go down another 10%? Yeah, right? But I think the process of scaling in can once again begin because there's no case for a down move in crypto, but there might be a case for another down move in equities. So that is how I would give you the quick answer to that question. Fed must make emergency cut to avoid market turmoil. Actually, no, it doesn't. No, it doesn't. So here's what the Fed's done, just to sum it up. The Fed has obviously made terrible mistakes in terms of first they didn't raise rates fast enough. Then they raised rates too much and left it there when it wasn't necessary, crushing the consumer. Now, the Fed, after not being dovish in July, is obviously watching the stock market, seeing in a way the error of their ways. But they're not going to come in and save the market with some emergency cut just because the S&P is 7% off its high. I mean, that's happened 30 times since 2009. These guys go off data. It's like, yeah, okay, our portfolios are down 50%, but they're not there to pump our bags. They're not there to pump anybody's bags. They don't want to go down in history as the people who let inflation get out of control. So you know what? They're going to let all these margin players in stocks get wrecked. People buy stocks, the stocks go up, they borrow money, and they spend money, and they pay any price for goods, creating inflation. So if you want to get inflation down, you let the market go down 20%. Then most likely they're underestimating what can happen from there, like a hedge fund or a bank can fail. Then they'll come in, then they'll do a whole bunch of rate cuts, then they'll pump money in the system, but they're not doing it before that. So everybody who's sitting around in the stock market waiting for the Fed to come save them, yeah, they're going to wait. They're going to wait. Now, an emergency rate cut is nice, but emergency rate cuts are saved for emergencies, not a 4% decline in stocks. Now, again, that doesn't absolve them of screwing up, but, when they were hawkish or not dovish in July, at the end of July, I was like, oh, no. Oh, no. Oh, no. So, this guy is dreaming. He's dreaming. Meanwhile, the U.S. Ethereum ETF posted the second largest daily Inflows. Hello. Right? I mean, equity market players love a discount. They love a sale. Ethereum down 20%. Ethereum may need some kind of healing process. I don't think, probably the biggest problem with altcoins is that like Ethereum, could be like so wounded that, we have to wait until stocks are really like done going down before everything goes up. But I mean, there is zero case for Ethereum below 2,000. And even if it does go down there, how long is it really going to last? Not long. So, this is an article where someone is asking, will Bitcoin or Ethereum recover faster? Okay, this analyst is looking at, I believe he is looking at, let's see what he's looking at. Okay, so he's looking at Ethereum and Bitcoin. Okay, he essentially thinks that Bitcoin can come back faster because Bitcoin has hit support, whereas Ethereum may have to trade in a huge range, which is not an unreasonable thing. It's actually a pretty good scenario, right? In other words, he thinks Bitcoin can make like a double bottom. And I was thinking about this too, right? So if you look at a tactical chart of Bitcoin, this continues with our tradition of mixing news and charts. I think it's very possible with Bitcoin to see something like this, where you make a double bottom or possibly take out this low and then just rocket to the upside. Matter of fact, a lot of times, a lot of these crashes end with that kind of price action. And down here, everyone's like, oh, well, gee, that's nice. A retest of the lows. Normally, a retest of the lows feels like the absolute end of the world. So if you think this is bad, if they go back down and retest the lows, that is really going to look like the end of the world. And of course, when it looks like the end of the world, A, it's not, and B, that's the bottom, right? Because when everybody's like, where's that picture? Where is it? Okay, where's the picture? Oh, I lost the picture. Where everyone's like, oh yeah, is it over? It's over, right? Yeah, no. When everyone's like, oh my God, it's never over. It's going to zero. That's the bottom. That is the bottom. Okay, some comedy from TikTok. I like to use my TikTok as a sentiment indicator. So let's see. There is no more Bitcoin, part 2. So Bitcoin is going away, etc. When Trump was at Bitcoin Nashville, 341,000 views. 341,000 on an account with 14,000 followers. Okay, so that was obviously a little bit frothy on sentiment. Then you have Jerome Powell's recession, 50,000. Stocks, sorry, not starry, 160,000. And the best crypto crash ever, 115,000. Now, what does this mean? Because this has never happened on TikTok. This means that people are so bewildered. People have no idea what's going on. None. Because there's a lot of macro stuff involved with the yen and what they call the yen carry trade. So people are confused, and they may wind up getting more confused. On a political note, the gold guy, who loves to laugh in our face, says that what the U.S. wants to do with Bitcoin is absurd, because I guess he's implying we want to print money to buy Bitcoin. Of all the things we do with printed money, buying Bitcoin as a reserve asset is just fine. If he saw the U.S. printing money to buy gold, he would be just fine with it, wouldn't he? Because that's his thing. So again, everybody piling on the FUD factor when it comes to everyone piling on the FUD factor with the decline in Bitcoin. Now, again, the media, don't you love them? Can anything pop the everything bubble? Okay, the everything bubble is what the legacy media refers to as, stocks up, housing up, inflation up. Everything is a bubble, everything, because it's all hyperinflated by the Fed. Okay, and yeah, so this is this huge TLDR article from The Economist, and it's very simple. How do you pop the everything bubble? You let a system-wide margin call happen in stocks. That's it. Like, I continue to believe that in crypto, our trade's done. Like, whatever was going to happen in crypto has basically happened. And that the best thing that they can do is like retest the low or make some marginal new low. These characters, oh my God, can anything pop the bubble? Is it ever going to go down? What's going to happen? Yeah, I know what's going to happen, people. Everyone's going to sell all at once, and then a hedge fund blows up. This very much reminds me of 1998, right? Back then, there was a currency problem in Asia. Stock market went down a lot. Hedge fund blows up. Fed cuts rates 3 times in 2 months. That was like the bottom of the internet. Like the trade, the decline to buy stocks for the start of the internet was July of 1998 when that crisis occurred. In this case, to state the obvious, the dawn of crypto will be the thing that you use, that you buy as these equity market characters pop the everything bubble. Okay, meanwhile, Goldman Sachs says a major U.S. recession is predicted. So Goldman Sachs undoubtedly knows who made the bet in the bond market for 300 basis points worth of cuts by March of next year. So I understand all of that. Investment banks a lot of times make forecasts based on what their smartest customers are doing. And this is an example, right? And this is also Goldman's way of telling you, without offending the administration, that they think there's going to be a 15% drop in stocks. It's that simple, right? They're telling you that the economy's going into a recession. We're already in a recession for certain categories of the country. Full-time jobs, gone, right? Full-time jobs been gone. Inflation, purchasing power, eroded every time you go shopping. Every single time. Oh boy, U.S. Supreme Court declines to halt Trump's sentencing in New York. Yeah, so as a reminder, Donald Trump is due to be sentenced by some left-leaning judge for 34 felony counts in September. Can you imagine if they actually put him in jail? Oh my God. You want to talk about social disorder? I really don't want what we have today in England, in America. All right. That said, I think if they made Trump a hero by putting him in jail, that would guarantee his election. This would actually be bullish crypto, even if they made him wear the orange jumpsuit for a week. Donald Trump says we should not be selling crypto. So very good move on his part by coming out during the crash and kind of buying the dip on the tape. Very smart move. And blaming this on the administration, which, is not far from the truth. Because, if they wanted to maintain the status quo, Powell just could have talked more dovish. He didn't have to do anything. He just could have said, yeah, we're happy with what's going on and we're probably cutting rates in September and everything would have been fine. But it is suspicious that when Donald Trump came out and said, hey, I love Bitcoin, Gary Gensler's going, the whole market turns over and blows out. The same thing happened to Consensus. So, Donald, no more speeches. By the way, this live stream that he was on with this dude, where this guy gifted Trump a car, YouTube suppressed it. Please do not underestimate how much the big Silicon Valley companies don't want you to be free. They don't. And when crypto gets loose, that's going to be the beautiful thing about it, because they're not going to be able to stop that. They're not. They stopped crypto the first time back in 2018. I was a firsthand victim of that. These guys don't want you to be free. Okay, so disaster statistics in stocks. We've wiped out 1.9 trillion of value. Okay, it's not about how much value gets wiped out in stocks. What matters in stocks is whether or not people who are leveraged sell, and that includes hedge funds, right? So it's like, oh my God, we wiped out such and such value. It gives the media something to write about. Okay. The real question is, are big leveraged players out? And the answer to that is no, because it hasn't gone down enough to really trigger a mass liquidation. Crypto ran in fear of such a thing, and who knows, maybe some crypto hedge fund blew up. But this is not over until a big equities hedge fund blows up. Okay. So meanwhile, El Salvador just going on its merry way, buying 1 Bitcoin a day at discounted prices. I do think this guy is completely wrong where he thinks the Fed is going to print to save his bags. That's not true. The Fed's not going to print until there's a crisis. Because if they screwed up this far, they're not going to just suddenly change their mind. I mean, I would be delighted and shocked to see the Fed come in and do any type of emergency things before there's an actual emergency. Now, to us, a decline of 20% in Ethereum is an emergency, but not to the Fed. Okay, not to the Fed. Okay, Solana is still the standout play for the bull market. That's probably true. Solana is outperforming Bitcoin strongly this morning. Solana hit a bunch of Lux Algo targets. We'll talk about that. Peter Brandt is an old school trader, is noting that, Bitcoin has gone down 26% from the halving high. So Bitcoin's dropped, and Bitcoin has dropped roughly that much in the past. And he's implying that in the headline that, this is like what happened when the 2016 bull run started, where, you have the Bitcoin halving, you have Bitcoin, go down, everyone gets bearish, and then the whole thing goes up only, right? Which is what's going to happen once the decline stops. Now, 48 or 46 seem like likely target if there's something wrong in equities. However, you can take to the bank in a way that the worst is probably over in crypto. In other words, even if they take it down to 46 in Bitcoin, which is going to look horrible, that is a buy. That's the buy, right? In other words, any final surge in fear off equities, you just take everything in crypto. You don't want to buy strength in crypto today, right now, because I don't think equities are done. Okay, so Trump is also telling the Biden administration to stop and not sell Bitcoin. It is not in our national interest. Of course, our administration may or may not care about what's in our national interest because they're on their way out. Okay, somewhere in here I have got, right. So this is Kamala Harris's new vice president from Minnesota. I don't know anything about him, but I bet he leans very far to the left. And it's interesting with his age, she's going to try to pull in boomers because people of that age group, they don't like Robert Kennedy, who's like, he could have been a center Democrat. So she's trying to pull in boomer voters with this guy. Also, Minnesota is a very left-wing state from what I remember. And again, as a reminder, 3 in 5 Americans say we're already in a recession. 70% say inflation is making our life miserable. And the only way this ends itself is with a bank blow up. Okay, some other things to note. This is very much like the COVID crash in crypto. In other words, when you have these like 20, 30% down days, to keep the technical analysis jargon to a minimum, you can see on charts that this was as extreme as COVID. And, that eventually led to a rebound on $14 trillion of printed money. That's not going to happen in this case, but the worst, you've seen almost the worst in crypto. The worst is a retest of the lows. Okay. In other words, you're just going to have to tolerate insane Bitcoin volatility. I have some historical work around the recent moon cycle. Bitcoin could be 15 to 20% in either direction. You could have Bitcoin go down another 10% and then turn around and go back up 25. That is the kind of volatility that you're going to be dealing with, which is why I don't necessarily want to buy the market when it's up. Buy the market when all those guys in the picture who were like, is it over? When they're like, it's never over. It's going to zero. Now, again, that sounds good, but if you thought the last one was scary, in 87, October was scary because they went down in October. It came back up. And then when it went back down to those lows in December, that's when people thought it was really over forever. So if they retest the lows, it'll look like it's over, but it's not. Because whatever happens to make it retest the lows, again, assuming that assumption is correct, that's what brings in the Fed. That's what brings in the Fed. All right. Now, for legacy, just so you know, the master of disaster, I'm not going to read all of this, but the master of disaster and legacy is a guy who writes an Elliott Wave newsletter who is essentially claiming that, the biggest bubble in history is about to burst. Okay. Everyone into the bubble, and he discusses the anatomy of a bubble, right? All right. So it says those who have traded the bubble correctly so far are like to show off their brilliance and overall financial and moral superiority. Okay. Those who generally enjoy momentum investing during bubbles, right, but missed this one or underparticipated. So in other words, there's still a lot of people in stocks who feel like they've missed out on the bubble, and they may buy the dip and they may get smacked. Now, there's probably also a lot of people in crypto who feel like they missed out on the rally earlier in the year, but to me, that's a distant memory, right? If anything, you want to go back and look say 12 months back, right? You want to look at the calendar year returns, and then you want to look at where something was versus August of last year. And nobody in Kaizen, nobody anywhere would have thought earlier in the year that this was going to go back down to where it is right now. So the bubble in stocks is not over. Now, investment banks like Deutsche Bank are starting to write about what is happening with the yen. So let's keep it very simple. The Japanese had to make moves to keep their currency from collapsing. As I said yesterday, when everyone was hysterical, I see that as good. Everyone else was like, oh my God, the world is ending. Okay, the world is not ending because the Japanese did save their currency. Now, the fact that the yen is not going to go down anymore hurts hedge funds, because what they do is they borrow yen at very cheap rates and they sell it, and then they take the dollars and then they go speculate. And then if the yen continues to fall, to keep it very simple, it's almost like if they make profits on their investment, then they go pay back the loan, they're actually paying back less than they borrowed. It's called the yen carry trade. So essentially, the yen is like a fire hose for speculation, right? It's like, oh yeah, let's borrow some cheap yen and then watch the yen go down. Well, that's not happening anymore. That's not happening anymore. I mean, the yen isn't going to the moon, but it could continue to rally. And that is going to put pressure on hedge funds. That is going to put pressure on anybody. So if you have a rising yen and a falling stock market, that gives you the final panic. And this is being written about across the board in legacy, right? After crashing 17%, Bitcoin development company MicroStrategy is rising in pre-market. Here's why. Yeah, because everyone in legacy loves to buy the dip. And if you have crypto related equities, the dip buying mentality holds, right? Stocks go down, Bitcoin stocks go down, buy Bitcoin stocks. Stocks go down again, buy more Bitcoin stocks, right? MicroStrategy, Coinbase, Galaxy Digital, and maybe Hut 8 mining, not investment advice. And then, of course, in altcoins, I'm going to be doing the research over the next week. You just look at anything now versus where it was in August. Anything that's still up, even if it's down, the chart looks awful. Anything that's up versus last August, yeah, that's where you got to get it. That may be the metric, as simplistic as that sounds. Okay, let's see who else is here. We have Jelster, we have QF, Katya, MY, Peter. Okay, gets to the live stream. Video playback interrupted. Are we still live on the air? I hope so. All right, I'm hoping we're still on the air. It looks like it looks like I'm still playing. Okay, let's go to PowerPoint. Okay, again, I'm hoping I'm still on the air. All right, PowerPoint, let's go. Okay, so stocks, again, stocks go down. They find support near 5,000 in S&P futures. Money flow, as you can see in the bottom right-hand corner here, is starting to go negative. There is zero reason to buy the dip in stocks. Zero. If anything, people are just starting to get out. As crazy as that sounds. Okay, NASDAQ futures, NASDAQ tech stocks, QQQ. Nice bounce yesterday, boys. Good job. You've got now 12% to go before you get the support. Okay, I think NASDAQ is going to unwind the entire rally just like everything else did. Just like everything else did. We're talking about just this calendar year. So they're going to wash all these people out of stocks. That's all. That's it. Simple margin call. And again, there was a guy yesterday talking about the 7% decline in S&P. He was like, you know what? Every time we have a correction, it's the end of the world. And it really isn't the end of the world. It's just the end of excessive speculation. Okay, this is what this guy said yesterday. Again, this is a good message for crypto people. It's not the end of the world. It's not. And the decoupling is close. It's close. But we got to get that final puke in stocks out of the way. Okay, Solana on the DeMark work. So Solana made a nice comeback. 135, 140 is a good area. But there could be one more day of this. You know, there could be 3 or 4 more days. This shows one more day. I can tell you this much right now. I do not want to see a failed rally from here. In other words, if the market kind of just sits here and goes up and down and is a little wavy, that's fine. Even if we get caught in another stock downdraft. Man, I do not want to see some 10, 15% spike and then a failed rally. I do not want to see that. That would be bad. That probably gives you 2 more weeks of pain. So believe it or not, if you're bullish crypto, you're actually cheering for something more stable, more sideways, more balanced, right? If Bitcoin and the big coins can stay relatively stable, right, or only retest the lows on any final down move in equities, I will take that. Now, the Solana on the 4-hour chart. So the 13 signal from yesterday worked as a bottom. That's great. Okay, this is not a very inspiring rally so far. Okay, well, it's better than it going straight to zero. You know what I'm saying? I mean, this may peter out, you know, today. But again, a retest of the lows in crypto would be constructive because that would mean equities are doing their final purge. Solana versus Bitcoin is outperforming, man. Solana versus Bitcoin is actually trying to kind of break out a little bit. So it's really funny. Like every time the market goes down, they're after Solana. And that's good, man. That's good. I mean, I wish they were after Ethereum, but Solana's the Ethereum of this cycle. So it's a good thing, right? It's a hopeful sign in crypto. Because, I mean, I know a lot of people in altcoins are down, and I know they can still mark it down 20, 30%. It's just a fact. I mean, if stocks get hit, certain altcoins can get hit. But again, we are way closer to a bottom than they are in stocks. Way closer to a bottom. And all this stuff, you know, like I said, I keep going back things like TrueFi, Aave, right? This stuff is closer to being over. Now, the thing that does scare me a little bit is what they did to Ethereum, but we'll talk more about that in a second. So what has really happened in Solana? Well, they did a false breakout at the top of the triangle. They did a breakout through the bottom end of the triangle, and they came back inside the triangle. And really in Solana, it's kind of funny. We did this huge crash, and it almost looks like nothing ever happened in Solana. Really. It's like still inside of its range. You know, Ethereum, we talked about this yesterday on the weekly chart, 2,300, right? It's where this year's rally started from. It's where last year's decline started from. It was where crypto winter started back here in the FTX days. It was where the final rally from the FTX days started. And it was the point where the 2021 breakout started. So, you know, 2,300, 2,000 in Ethereum, that's probably like home, right? In other words, if you see Ethereum below 2,000, you know that you're stretched out beyond all imagination. That's where you're getting into despair. I heard fear, greed, I put it on my Twitter, is at 17. Fear, greed was like at 80 at the top. It's now at 17. How are you going to push Ethereum below 2,000 with fear, greed at 17? Where's it going to go? 6, right? So Ethereum on a 4-hour chart, it didn't look that good yesterday. It still doesn't look that good today. I mean, it stopped going down. There were a lot of wicks. Obviously, people know about this 2,100, 2,300 support area. Okay, but everyone is not like, oh, God, let's get long right now. But, you know, eventually they will. Ethereum is just, you know, wounded. Okay, Bitcoin. So we have one more day of this based on the DeMark work. I'm keeping it super simple. You do not want to see any type of big rally up to 58 or 60 that fails. That would be really bad. My suspicion is, or my guess is that, you know, you could wind up seeing 48 for a final low before it is just like totally over, right? Because if you saw 48 and you saw stocks blow out 10%, there's no sellers left. And then someone blows up, the Fed comes in, and then we're off to the races. Literally, like, you know, it may not be a banana right away, but they're close to selling themselves out. And again, a lot of times crypto, when they have these wicks, meaning it goes down and then it comes all the way back, they retest the bottom of the big wick. You know, I know that sucks, but you know what? You're waking up this morning, you're still standing, your portfolio's wounded, but the world did not end. The world has not ended. And even if it goes back down and they flush everybody out in stocks, that won't be the end of the world. As a matter of fact, that will be the beginning of the crypto bull market. So 4-hour chart of Bitcoin, again, fairly stable, but not exciting. You know, there can be more of this. There can be more, particularly if stocks give it up. This is the Bitcoin weekly chart with a very important moving average around 48K. This Elliott wave work indicates that, you know, you had the big run up earlier in the year. Then you had this, like, I don't know, this 8-month grinding correction, which is like chopped everyone, including me, to bits, where only really traders have made money. So they blow everybody out down here to 48K, and then they do the final glorious leg of this uptrend to something well over 100. Nobody who pukes out Bitcoin and gives up here, no matter how horrible it looks, if equities go down, you won't be able to live with yourself if you give up on crypto here. I mean, sometimes people lose so much money that they have to get out to protect themselves so that they don't get all their capital wiped out. I understand that, but I'm not going to quit on crypto, even if they take it back down again. Matter of fact, I think if they take it back down again, that's where you should be, like really trying to push money into the market. Okay, again, 42 is where a lot of people are talking about. So, we play this game. When it's at 70, everyone's like, oh, it's going to 175. And then when it's at 50, everyone's like, well, it's obviously going to 42. So there is a big demarc point at 42. A lot of people think that's where it's going. I think 46 to 48 to me feels a lot more reasonable. Like any type of final flush where the newspaper goes, oh my God, Bitcoin falls below 50K. It's the end of the world. That's the end of the down move. Okay, Bitcoin on a weekly basis, again, you got huge Lux Algo support somewhere between 48 and 46. I don't know there's no case to go below that unless you got, you'd have to have a nuclear event. Now, I know there's all this war posturing in the Middle East. It's basically a big excuse to sell weapons. The Iranians are not going to attack anybody when they've got massive supplies of weapons from Russia landing in their country. They're going to buy the weapons. They're going to get the weapons. They're going to deploy the weapons. It's going to take months. And then once they have the weapons, everyone's going to be too scared to attack them. So this whole geopolitical thing that they use to flush out the markets, it's just that. It's a tool to flush out the markets in crypto because they want to buy all the Bitcoin. Now, in equities, probably Michael Saylor and them are sitting around drooling, waiting for somebody to blow up over there because they're like, oh my God, we might get it even lower, right? So next drop in equities, the decoupling starts, and that is the market update. Okay. So Mr. Lim is asking to clarify, does BTC have a higher chance to drop once more before it skyrockets? Should we hold off and wait for dips? Okay, well, this is a very unique situation. My answer would be yes, that you should hold off or scale in, right? In other words, if you had a certain portion of your money, starting to scale in on any approach of, say, 54 or any move below 54 would be the way to go, right? In other words, if you had some crypto, you can just leave it. If you had no crypto, yeah, then you could start building a position. But again, with small altcoins, you can still have very extreme volatility. Okay, my quick answer to that is I would wait, right? In other words, let them sell it one more time because equities are not done. I mean, we cannot have equities go down 5 or 10% and crypto do nothing, right? I don't see a hurry, and I don't want to buy the market necessarily when it's up. Daniel Plays Paintball says, what hedge fund blew up back then? It was a hedge fund called Long-Term Capital Management run by a quantitative genius, John Merriweather. So the hedge fund blew up. We really thought that was the end of the financial system. The Fed cut rates 3 times. No meetings. The Fed didn't really do rate cuts around meetings back then. Okay, the Greenspan just came in. It's like, we're cutting rates. We're cutting rates. We're cutting rates. They were not going to let that blow up the system. It was a quantitative hedge fund that worked using mathematical models, and their mathematical models didn't anticipate a currency crisis in a small nation in Asia that spread all throughout Asia in terms of the disturbance that it created, and then all their models broke, which in a way is like what's happening here, right? Nobody was anticipating a massive problem with the yen carry trade and the Fed being too stupid and too tight. So, if you want to buy the dip, just wait and let them give you a dip. Let them give it to you. Okay. So I'm gonna wrap it up there. Okay. Don't get despondent. Don't let them shake you out of crypto. The problem is stocks, not crypto. If crypto goes down because of stocks, that is the opportunity. And make sure you check where your crypto is versus where it was last year. Because if it's still up or it's still okay versus where it was at the bottom last year, that crypto may wind up coming back. And you could also probably draw a support level and say, hey, let me go to TradingView. Where was Polkadot a year ago or 12 months ago? And that is the new TA. So stay tuned for more of that from me. We'll see you tomorrow.